we'll start with Nvidia and now working on a new chip that they can sell to China.
Yeah, good morning, Nicole. That does appear to be the news. Some sort of a downgraded version of this H20 AI chip for China is planned to be released sometime in the next couple months. This is following U.S. export restrictions on the original model. This is, of course, a Reuters report that cites some familiar with the matter. They notified major Chinese customers as well, including leading cloud computing providers, and they aim to release this modified chip sometime in July. Now, on the surface, while that reads as a pretty good story, Nvidia shares are little changed on this news, up, let's call it, 50 cents or so, or at least that's indications in the pre-market. So despite the optimism that you talked about maybe in that overall market, and this story not doing much to really get Nvidia moving to the upside here today.
All right, so it's interesting. It's not getting much of a move, but I'm really happy to hear this because I was concerned when I started to hear Huawei sort of filling in the holes, and I guess Trump or people knew Nvidia could change it up and fix it and do it in a way to meet the regulations and get it done. And look, Nvidia at 117, not below 100 where it had been, so it's making a nice comeback.
Yeah, I think it's also just economic reality in some cases, and sometimes you got to look at things through some sort of realpolitik lens. Like, it wasn't as if China was never going to get these chips. They would probably just go through intermediaries. It creates sort of a secondary market for these types of things. And so when you look at it, it's similar to export controls on countries like Russia with oil. Didn't stop Russian oil from hitting the market. It just created intermediary countries to kind of serve as the player in those the different trades. So I look at it as it's probably something that Nvidia was going to have the impact, but for many ways China would have found ways to get this technology, whether that was through companies like Huawei or buying it through other countries that Nvidia could sell to. That said, about $17 billion in revenue is where Nvidia in China sit. And that's about 13% of Nvidia's total sales. So if they're able to, connect directly using this more downgraded chip, perhaps that limits the impact of some of that when it comes to the total revenue that Nvidia gets from China, which again, 17 billion or so for last year. That's about 13% of total sales.
Nvidia's stock hit some difficult headwinds in 2025. Shares of the chip designer are down 15% year-to-date as of this video, but the recent developments in the AI hardware market could spur a comeback. The company's biggest clients are expected to spend a significant amount of money this year to strengthen their AI infrastructure, and the stock's valuation and strong earnings growth potential make it an obvious choice at this time. The stock price declined for a number of reasons, including the macroeconomic uncertainty brought on by President Donald Trump's tariffs, worries that Nvidia might face increased competition in the AI chip market, and worries about a possible decline in spending on AI hardware after the introduction of DeepSeek's affordable AI model. Some of these worries are exaggerated. In light of its recent decline, here are 3 reasons why Nvidia is a great AI stock to purchase. The Chinese AI startup DeepSeek claimed to have trained its R1 reasoning model for a fraction of what major tech companies spend on training their large language models, LLMs, which caused Nvidia's stock to plummet in January. This raised worries that orders for Nvidia's graphics processing units, GPUs, which are in high demand from businesses and governments to train and implement AI models in data centers, would be canceled. They haven't yet. Investors' worries regarding GPU demand should have been allayed when Nvidia's management provided sound guidance in February, when the company announced its fiscal 2025 fourth quarter results, which ended on January 26th. Its Q1 fiscal 2026 sales forecast of $43 billion represented a 65% year-over-year growth. Considering that Nvidia has already established a sizable sales base, that is significant. With $130.5 billion in total sales at the end of fiscal 2025, it more than doubled its top line for the year. The strong demand for Nvidia's most recent generation of Blackwell AI GPUs, which produced higher than expected revenue last quarter, was cited by management as the reason for its optimistic outlook. It won't be shocking to see Nvidia release yet another impressive set of data this month. Tech behemoths like Microsoft, Alphabet, and Meta Platforms have recently stated that their investments in AI data centers are still sound. For example, at the midpoint of its new range, Meta raised its 2025 capital expenditure projection by about 9% to $68 billion. The increased investment will be used to strengthen the AI infrastructure of the massive social media company. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
I think two big things are going to come out of today's hearing. One is that this is a space where it's frankly intensely competitive. We have all the big players, Google, Microsoft, Amazon competing in AI. We've got upstarts like OpenAI and Anthropic. They're all competing really avidly with each other. And that is great. That's actually prompting the companies to innovate at such a huge, rapid pace, and that's been great for consumers. And so I think what you see when you see multiple CEOs testify like you have today, that competition is kind of alive and well. But I think the second thing that will come out is that we are in a AI arms race against China, and it's really important that the government really put forward kind of a unified policy approach to beating China in AI. We don't have that today. We actually have some cases where our government is at war with some of our leading companies, particularly on the antitrust front, who are going to be the ones who beat China in AI. And so I'd like to see kind of a more unified approach to how we approach our AI competition against other countries.
Yeah, and talk to me about that competition piece. We're going to get to some of the headlines about Alphabet and Apple in just a second here, but do you think that there are going to be questions to Sam Altman about whether or not there's enough competition in the AI space? How do you think that's going to go?
There will be, but I mean, to me, the answer is obvious. I mean, again, I think there tends to be kind of focused on, well, is there enough room for startups? But I mean, when you have 5 or 6 large companies competing with each other to be to really lead in AI, that is outstanding. And that's really what we're in the midst of, or that kind of intense AI competition. So I see nothing but upside for companies competing with each other to be leaders in AI.
And Adam, Keith Lerner, my guest host, has a question for you as well.
Hey, Adam, thanks so much. Great points. When we think about the broader stock market, to us, the stock market, as I mentioned earlier, is different than the economy. So as I'm talking to small and mid-sized business owners, they're seeing some weakness. With the AI side, the competition you said is good. So do you think then the capital spending that we've been seeing is going to just continue to accelerate like we've seen over recent quarters?
I do, but I think the big cloud over the whole space, both big and small, is Trump's tariffs. Because, yes, companies do want to invest, but there's this uncertainty, right? And Trump on the one hand says, I want to, spur building here in the United States. But on the other hand, he's giving exemptions to companies. That creates uncertainty. And then on the other hand, he says he wants to use the tariffs as kind of a negotiating tool for other policies. So the tariff strategy isn't clear at all. That's created a huge amount of uncertainty on the part of business about, do I have any predictability in terms of my investment? That's also having downstream impacts on the small companies, the small suppliers. So you look at AI, okay, you think, okay, well, they're building AI data centers. Well, those data centers are full of equipment, hardware that is subject to tariffs, right? And so, the tariff policy has all these downstream impacts on the AI industry.
Due to AI capacity limitations, Microsoft anticipates increasing its capital expenditures in the upcoming fiscal year, which is on track to reach $80 billion in fiscal 2025. Even Alphabet has reiterated its 2025 capital expenditure projection of $75 billion, a 43% increase over the previous year. All of this helps to explain why Morgan Stanley predicted that sales of Nvidia's Blackwell processors would soar to $30 billion in the first quarter of 2025, almost double the company's revenue in the fourth quarter of fiscal 2025. When it comes to AI chips, Nvidia remains the industry leader. Although there have been worries that rivals would sabotage Nvidia's impressive development trajectory, the chip maker appears to be still far ahead of its competitors in the AI chip industry. In the previous fiscal year, for example, Nvidia sold data center processors valued at $115 billion. That was far more than Advanced Micro Devices' projected $5 billion in data center GPU sales. In its most recent fiscal year, Broadcom, regarded as the next most significant semiconductor company after Nvidia, sold only $12.2 billion worth of AI chips. In the meantime, Intel's data center CPUs aren't getting much better. Nvidia's excellent supply chain control is projected to help it maintain its dominant market position in 2025. The semiconductor bellwether is predicted to control 77% of the AI semiconductor wafers created this year, up from 51% in 2024. It is anticipated that Nvidia will maintain its dominant position in the AI chip industry as the wafer consumption shares of AMD and Intel decline. Chipzilla's revenue from its data center and AI segment increased just 8% in the first quarter of 2025 to $4.1 billion, indicating a $16.4 billion annual revenue run rate. With the AI chip market expected to increase at an annualized rate of 35% annually until 2033, that should set the stage for fantastic long-term development in Nvidia's data center revenue. Right now, Nvidia's valuation is too attractive to ignore. Due to the stock's decline this year and its remarkable rise, investors can currently purchase Nvidia at a favorable price. Compared to its price-to-earnings ratio of 62 at the end of January, Nvidia's stock is currently trading at 38 times trailing earnings. Additionally, the forward earnings multiple of 25 is lower than the earnings multiple of 42 for the U.S. technology sector and signals for a significant increase in its bottom line. Analysts predict that Nvidia's earnings will rise by 48% this year, which is much more than the S&P 500 index firm's expected 8% average earnings growth. The aforementioned factors allowed Nvidia to achieve such robust growth this year, and as its margins improve in the second half of the fiscal year and Blackwell processor manufacturing ramps up even more, there's a potential it might surpass analysts' projections. Given its reasonable price, leading position in AI chips, and the tech sector's strong spending on AI infrastructure, purchasing this AI stock currently seems like a no-brainer. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
And that's why I want to talk about China. You've studied this situation so much. As you say, you lived it. You've got a new op-ed about how the Chinese AI, DeepSeek, has been a wake-up call for the U.S. and the tech sector here, and that the U.S. needs smarter AI controls. Tell me about DeepSeek and how you read this.
The DeepSeek is a competitor to American AI, generative AI, open AI, or ChatGPT. When you look at it, initially it was everybody was so excited and tuning into some of the Chinese propaganda, Chinese narrative that this is the cheapest alternative, open source. But when you start digging through and even looking for information that are widely available in American AI, such as Tiananmen Square, Taiwan, Tibet, or anything relates to the Uyghurs, it shows up and then starts leading. So that gives an idea that the Chinese are not building something fascinating, but they are building a censorship. Whereas American AI, with its all faults, is open. It's open. It doesn't censor. There are a lot of issues need to be addressed because this is emerging technology. There are regulatory aspects that need to be addressed. Privacy issues needs to be addressed. Data issues need to be addressed. But the American leadership is much needed today in the AI field, specifically with the smart chips control policies. AI chips today is a new oil. If you let the authoritarian regime to dominate that market, we'll be importing not just goods, but governance model. A new arms race isn't just missiles, it's microchips, and America must build and not to beg.
Yeah, no, you're right, Nuri. I was speaking with one startup founder yesterday who's beginning to do just that. It will take time, but it's absolutely not sustainable for the United States to be reliant on Taiwan for advanced semiconductor chips, those chips that we're actually using in the military.
Absolutely. So the key issue today is that American people like to talk about these issues, but we need to look at it from the investment point of view, strategic export control compliance perspective. And also I'm pleased to see that the AI diffusion rule has been looked at and to be replaced, or rescinded and replaced with a broad, with a different approach. Export control only works if you pair them with the growth. We need R&D, energy infrastructure, and chips leadership to win in the AI age.
Great.
According to a Reuters story released Thursday, Nvidia is getting ready to introduce a tweaked version of its H20 artificial intelligence chip for the Chinese market in the coming 2 months. In order to comply with U.S. restrictions that restrict China's access to breakthrough semiconductor technology, the updated chip is anticipated to have a lower memory capacity and other performance changes. In the fiscal year that concluded in January 2025, around 13% of Nvidia's total sales came from China. Last month, CEO Jensen Huang traveled to Beijing, emphasizing the region's significance for the company's long-term development. Chinese tech behemoths like Baidu and Alibaba, as well as smaller companies like DeepSeek, employ the H20 microprocessor extensively. Nonetheless, local competitors like Huawei may profit from the tweaked chip's diminished capabilities. The United States' export restrictions are a component of a larger plan to keep up technical superiority in vital fields like artificial intelligence. 51 analysts provided one-year price goals for Nvidia, with an average of $163.71, a high estimate of $235.92, and a low estimate of $100. From the present price of $117.37, the average target suggests an upside of plus 39.48%. One of the big picture trends that has captured Wall Street's attention is artificial intelligence, AI. Nvidia is essentially the poster child of the AI industry, with Wall Street watching every word the management says. AI is impressive in many ways, and it has been developing very quickly as well. Almost every major corporation has started to use, or at least experiment with, the technology. Investors often get an idea in their heads and run with it, pushing prices to unrealistic extremes. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Just like you said, we're seeing around 70% of the stocks in the S&P 500 up in the early session right now. And that's really just signifying the fact that market breadth continues to come in to this market. And we might see today maybe a little bit of enthusiasm or a trade ahead of this China trade talk situation that's going to happen over the weekend here. And maybe that gives enough enthusiasm for us to break above that 5,700 level and be able to close above that. I think that's going to be the key area for today. And if we're looking at the intraday chart here, 5,700 is going to be your first area of potential resistance. We did break through it yesterday, but we weren't able to sustain it. And obviously, we had some market commentary around 10 minutes to go into the close that really pushed us lower here. But if we're able to break above 5,700, I'm looking at 5,740 to the upside here. Wide range to the downside. The first area of structural support is going to be 5,630. Keep that one on the radar here. That's going to be the 200 period moving average on the 15-minute chart that has been acting as a pretty decent area of support. And anything below that, you're looking for buyers to really try to step in at 5,600 here. Obviously, this is going to be based on the news flow today, and we have seen some pretty sharp reactions for the market, both to the upside or downside, just based on the commentary coming from the White House here. But the market was able to shrug off maybe the early commentary coming from President Trump around 80% tariff for China, because at the end of that statement saying that it's up to Scott B in order to be able to make this deal. And I think the market's pricing in that Scott Bessent is going to try to maybe reduce those that level as much as he possibly can in order to not only make a trade deal, but also to be mindful of the impacts of tariffs on the U.S. economy. So we're holding up pretty well here to start off the session.
Right, understood. We were just speaking with Kevin. He was noting how April, that we saw, early April, we saw oil at $71 and we've dropped below 60 not that long ago. We're at 60 right now, right? Just the sell-off we've seen, but we've had a bit of a comeback from our lows. What are you watching in crude here now?
Yeah, for crude oil, I think we've had a little bit of a technical, push to the upside here over the last couple of trading sessions, and that's really signified by the open interest. We actually see it declining over the last couple of trading sessions here, which kind of signifies that maybe the shorts that were in the market maybe closed out those positions. But now we're at a pretty critical area for crude this morning here. We have the anchored volume weighted average price that I have basically from that low that we had from at $55.12. That was back on April 9th here. Just averaging those prices out, that has now shown in that purple line to be a potential area of resistance, as well as the highs that we had back in April 1st as well. So we have just this confluence of moving averages that are really kind of pointing to the $60 level being a key area here for crude to try to overcome, but it could be actually an area of resistance. It also matches with that 20-day moving average on the daily chart. But the MACD does actually have a little bit of a bullish cross here at the bottom there. But once again, kind of noting this counter trend rally to the upside has been complemented with volume decreasing on these up days. So a decent move to the upside, around 5.5% from the lows right now when it comes to oil, but still has a lot of work to do. And I'm not sure if it's truly pricing in the macroeconomic factors that we have in the next 3 to 4 months. But if we actually have a trade deal or a signal of a trade deal or a framework after this weekend, you could see oil rally pretty aggressively here, Nicole.
Right, understood. And last but not least, you're watching a chart of Nvidia?
Yep, looking at Nvidia, we're going to look at the 3-year weekly chart. And the reason why I'm bringing this one up, it's testing the upper end of a resistance level here. It has had a bull flag pattern. We've been in a bullish trend. If you're looking at the last 3 years, we have had a consolidation here, and we've been keeping this channel pretty much intact. And right now it's going to be testing, or fairly close to testing, the upper end of that channel, sitting at around that 120 level. And if we're able to break above 120, I think 124 is going to be the key area of resistance for the stock. CCI is really getting close to crossing over that momentum line, which is also bullish, and MACD looks like it wants to cross in a bullish formation. So this is just a setup, Nicole, that just has been intact for actually for a fairly long time, pretty much the whole year. And we're going to see if we're going to actually have a technical breakout to the upside here and try to recapture maybe some of these losses that we've seen over the last 3 to 4 months.
Yeah. All right. And